Welcome back, and in yet another internet computer video, we're going to be discussing ICP is powering cross-chain lending. This is an article that was written by Liquidium Finance's product architecture engineer. And as you guys know, Liquidium Fi is one of the protocols that are building on top of Internet Computer. And one of the conversations that we've been having with Internet Computer as of recent and pretty much for an extended period of time is chain fusion capabilities, which is the interoperability feature for the Internet Computer. And we've also discussed in a brief kind of decentralized finance on the Internet Computer and how it compares to the rest of crypto. Now, obviously, we know and have come to the conclusion that it seems like Internet Computer and DFinity are trying to become the infrastructure layer for the world in terms of decentralized compute, decentralized internet, world computer status, and more. But for Internet Computer to kind of stay relevant and kind of stay in this whole crypto narrative, they need to continue to evolve and continue to not only just try to achieve, dominance in the AI infrastructure space and be the back end for these other AI systems, but they also still need to do finance, right? Because financial movement of money and movement of finance and movement on these blockchains is originally what Bitcoin was created for. And so there needs to be tokenomics, there needs to be lending, there needs to be flow and movement and velocity of the money, which is ICP in the Internet Computer ecosystem. So in today's video, we're going to be exploring what cross-chain lending looks like with Internet Computer, what DeFi looks like in Internet Computer, and we're going to be also discussing some of the challenges and some of the maybe not so positives in this kind of cross-chain interoperability world between Internet Computer and the rest of blockchain. This is the Cryptoviser podcast. We talk about everything crypto, blockchain, and investing every single day of the year since 2018. So make sure you guys are subscribed to the channel. Give the video a free thumbs up because you guys know thumbs up are free, but crypto is not free. So make sure you guys are subscribed. Give the video a thumbs up and potentially think about becoming a channel member by clicking the join or subscribe plus button down below here on YouTube to learn more. And thanks to all of our channel members and everybody who does give the video a free thumbs up every single day. Let's get right into Internet Computer powering cross-chain lending. So like I said, this article was written by a product engineer over at Liquidium Finance, which is I guess you can call it a decentralized finance protocol that's building within the Internet Computer ecosystem. He says DeFi is currently isolated. Doing anything cross-chain often involves centralized solutions. Liquidium Finance aims to change this, starting with the base of finance, which is lending. He talks about not reinventing the wheel, and basically they're going to be heavily basing their design off of Aave, which is one of the main DeFi protocols, and continuing to grow much larger in the traditional decentralized finance space in the Ethereum based ecosystems. But anyway, he says about true blockchain interoperability. While fully abstracted from our users, the backbone of the protocol Liquidium Fi is built on Internet Computer. It's only with the recent advancements in their chain abstraction and chain key technology, this is their interoperability feature, that something like this is possible. They made blockchain itself capable of directly reading from and writing to other chains. Internet Computer smart contracts, called canisters, can now sign and submit transactions to other chains without any intermediary. For example, a smart contract on Internet Computer can hold actual Bitcoin private keys, monitor the Bitcoin blockchain in real time, and execute Bitcoin transactions all natively on the Internet Computer. This is possible through something called threshold cryptography. Instead of one entity holding your Bitcoin private keys, ICP nodes collaborate to produce threshold ECDSA signatures, meaning the private key is mathematically distributed across hundreds of independent nodes. No single node can control your funds, but collectively they can sign transactions when the smart contract logic requires it. Now, chain key assets, there is a fundamental problem with the current popular bridging infrastructure that's basically mostly used within the Ethereum and Ethereum adjacent chains, right? It's a bridge, and we know that these bridges have been exploited and hacked and for a lot of users have lost a lot of funds utilizing these bridges. He says, take wrapped Bitcoin as an example. It requires users to deposit their Bitcoin with a centralized custodian, BitGo, who then goes and mints corresponding wrapped Bitcoin tokens on Ethereum. Users must trust the intermediary, in this example BitGo, to hold their assets securely and honor redemption. This creates single points of failure and goes against the core principles of decentralization. Now, when minting chain key assets on the internet computer like chain key Bitcoin, your Bitcoin is stored on a specific Bitcoin address controlled by the internet computer minter canister or smart contract. The minter monitors the transactions in real time and detects when Bitcoin arrives to the address. After waiting for sufficient confirmations, it mints the equivalent amount of chain key Bitcoin on the internet computer. This process is completely transparent. Any user can convert native tokens to the chain key token and vice versa, with all underlying Bitcoin addresses publicly auditable. For redemption, chain key Bitcoin is burnt on the internet computer and the minter executes a Bitcoin withdrawal transaction, sending the corresponding amount of native Bitcoin to the specified Bitcoin address. And that's all being done within the Bitcoin blockchain itself. Throughout this entire process, the Bitcoin backing chain key Bitcoin is held 100% on chain by internet computer smart canisters, using the same threshold ECDSA signatures that enable cross-chain transactions, so no intermediaries or centralized bridges are involved. This creates true digital twins of native assets rather than wrapped tokens dependent on trusted parties. Now, I'll agree with everything here. There is one caveat. And the caveat is that Internet Computer is a trusted party. They may be a decentralized network with ECDSA signatures and all of this, but there's still risk. I don't want people to think that there's no risk or there's less risk utilizing chain key cryptography versus a bridge in another ecosystem. We just haven't seen the potential risks playing out in real time just yet. I mean, we did recently have some type of hack within one of the protocols that are built on top of the internet computer that connects internet computer to Bitcoin. And about 50 Bitcoin were stolen from that. Now, again, we haven't had a full kind of revisit to that whole situation. And I don't even think the ecosystem wants to, because they are pretending that there was no hack. They're like, no, there was no hack. It's like, no, when we actually look at the actual Bitcoin in chain key cryptography that's basically deployed on the internet computer, you can see that in the last month, we went from 480 Bitcoin down to 430 Bitcoin, showing the 50 Bitcoin theft, effectively. Now, the network has recovered since then, but the point is, there is a trusted third party, and that is the ecosystem that you're using. And I think there definitely needs to be a little bit more clarity around that, okay? Because this idea that the ecosystem or the community is saying that there was no hack, that's a red flag, because there was, whether it was internet computer getting hacked or the protocol built on internet computer getting hacked or the bridge, or there was a hack and 50 Bitcoin were stolen. If we can't even acknowledge that, how can we trust the internet computer, right? And so we do need to have clarity here, but again, it is very different than the way that Ethereum interacts by wrapping coins and doing all of that. And obviously, we know in the Ethereum ecosystem, there have been plenty of hacks that have gone on within these interoperability bridges. And really not a lot of this has been fixed within the Ethereum ecosystem. And so having an alternative, having something else that does this interoperability in a different way, like internet computers doing, I think is very, very good. Kind of, you have a different kind of mechanism, a different thought process behind that mechanism, a different code behind that mechanism, so that you can see if it works. Because clearly in Ethereum, just constantly getting hacked and exploits on these bridges is definitely an issue. So how do we utilize this technology? Well, chain key assets fundamentally reshaped how we redesigned the protocol. And by the way, let me also kind of take a pause here before we continue, because it kind of goes in what I was just talking about with the risk and trusting the third party. One of my beliefs in these crypto ecosystems is that there needs to be multiple different ways to do different things. For instance, interoperability. Now, Internet Computer has chain key cryptography. This is how it interoperates with other ecosystems. But Internet Computer does not have native USDC or native Tether deployed to the blockchain. Now, native USDC or native Tether, while these are stable coins, natively, they would be issued by the actual USDC or Tether issuer directly. And that would allow more interoperability between the Internet Computer and other ecosystems utilizing the stablecoin. Now, obviously, people are going to say, but Cryptoviser, you have to trust that the stablecoin issuer is not going to do X, Y, and Z. It's like, yeah, but what I'm saying is, if you're just relying on chain key cryptography, and this is the only interoperability feature for Internet Computer, and something happens with chain key cryptography, an exploit, a hack, a major, I don't know, like things that we can't even foresee, the entire ecosystem is negatively impacted because of one feature. Now, if you have multiple different ways to utilize interoperability, chain fusion technology, stable coins, maybe Chainlink, which we'll talk about in a minute, if one area of the ecosystem has issues, you still have the other areas of the ecosystem that don't have the issues and still have the trust. Because even though we like to believe that this is a completely trustless environment, like there has to be some level of trust, even in the base layer of the blockchain, that there's not going to be issues. And so one of my big critiques of the Internet Computer is the fact that they are putting all of their energy and focus into these native features of Internet Computer like chain fusion, but they're not focusing on any other thing. So they're putting literally all their eggs in chain key cryptography basket. And while it may work out perfectly fine, what if it doesn't? There's no backup, there's no redundancy. And that is a concern in my view. I mean, even something as simple as Chainlink, cross-chain interoperability protocol, I would imagine, and again, I'm an investor and an analyst. I am not an engineer and I am not a coder and I don't want to be. So I'm giving you guys my analysis as an investor in these ecosystems. Now we know that Chainlink is now bringing government data on chain through the US Department of Commerce. We know Sergey, the founder of Chainlink, is heavily involved in the conversations at very high levels, the White House and Congress and stuff like that about crypto. Why in the heck do we not have a Chainlink integration on Internet Computer? This would open up massive doors and massive velocity of movement of money in between different chains, and also creates choice. And this idea that we don't want choice, this is a very risky strategy of not having Chainlink, not having USDC, not having Tether. We can see this in other ecosystems like Cardano. We talked about this extensively in the previous cycle, 2020 and 2021, where Cardano ecosystem of developers and bots would say, no, Cryptoviser, we don't need Chainlink. We don't need USDC. We don't need interoperability because look at Ethereum's interoperability. It's constantly getting hacked and exploited. And so Cardano chose to not integrate any interoperability, period, like at all, because they were scared of potential exploits going on in the Ethereum cross-chain interoperability bridges. So instead of like saying, well, that didn't work, let's try to create something better, or let's at least interact with it and give our users the choice. We're now almost in 2026 and Cardano still has no interoperability, still has no USDC, still has no Tether, still has no Chainlink integration. I mean, I could keep going on and on. When all they had to do was implement it 5 years ago, and they would probably have a lot more velocity in their ecosystem, probably a lot more development in their ecosystem, and so on and so forth, just by having the choice. And this is very key in my view. And Internet Computer, while I am a big Internet Computer fan, I am a bull, I cover this ecosystem very heavily, and I think that they are really focusing on not necessarily the financial aspect of things in aggregate. They're really focused on the infrastructure play, world computer, and all of that. But, okay, there's still, like, for Internet Computer to be the world computer, to think that they don't have USDC or Tether natively issued by the actual protocol itself, that it can't be the world computer then. Like, impossible. If Internet Computer cannot connect to Chainlink natively, it cannot be the world computer. It can't be. So I'm not saying that all of these other things that Internet Computer are building are not good, because they are. And obviously, like I said, they have probably more of an AI and a kind of infrastructure focus than they do kind of what Ethereum is or Solana or whatever. But by siloing the technology, and this is, again, a lot of what we talked about with Cardano. We can talk about the same thing with Ripple, right? It's siloed technology. Ripple, XRP, I should say. XRP is not interoperated with any other ecosystem. XRP has no native stablecoins besides Ripple's stablecoin. And this is an issue because Ripple doesn't necessarily use XRP. And so this idea that, Ripple's going to pump XRP, I mean, it's clearly not true, and it hasn't happened yet. But again, it's a siloed ecosystem. And so I believe that the upper limits from a price perspective are very, very limited, because it doesn't have all of these base level features that every other ecosystem has. And I'm not sure why they don't want it or why they don't do it. It seems like getting integrated on Chainlink or with USDC or with Tether would be probably fairly easy to do. And we still have chains like Cardano, like XRP, that it's not even in their plans. So what are they going to do? They're just going to be their own blockchain, and not. It's like having the internet but not being connected to the internet. So you have an internet computer, like an internet capable computer, but the computer has no way to connect to the internet. It's like, what? As Vitalik would say. So I'm not trying to be critical of Internet Computer, but I'm trying to just level set what my viewpoint is on the future of Internet Computer if it's going to be in this world of crypto and be the infrastructure layer for AI. Like, it needs these other interoperability features. Chain fusion is great, but nobody outside of Internet Computer understands, knows, or uses chain fusion capabilities. And so saying, oh, well, you don't even have to trust the protocol, just come over to Internet Computer and use chain fusion technology. It's like, wait, you're telling me not to trust the Ethereum ecosystem, which is the number 2 crypto, number 2 blockchain. It's being used by governments, used by banks, all of this. You're telling me not to trust them, but to come over to Internet Computer and trust a new technology that's siloed, and they're not even trying to test anything else like Chainlink or even Ethereum bridges. I don't get it. I don't get it. And maybe that's just, I'm missing something here. I know obviously the Internet Computer bulls are going to say, Cryptoviser, you're totally missing the point. You don't understand what chain fusion technology is. It's like, no. You're missing the point if you think this is about chain fusion technology. This has nothing to do with chain fusion technology. I actually think chain fusion technology is great, and chain key Bitcoin, chain key Tether, USDC is great. But this is not what I'm talking about at all. I'm talking about Chainlink. I'm talking about natively issued stable coins from the issuer directly. They're not doing that. And there's no reason why. Maybe USDC and Tether, I get it. But Chainlink, why there's no connection to Chainlink? And again, to the Internet Computer fans and fanboys out there, here's the deal. You can keep saying, well, they may do it in the future, but right now they're focusing on chain key. It's like, why can't they do both at the same time? Because here we are, 5 years after I was talking about this with Cardano, and Cardano still doesn't have it. And they're like, well, maybe now we're going to get real USD from Ripple, and they still don't have it. Ripple's had their stablecoin for a year. Cardano doesn't have it yet. So what makes me think it's going to be there in 5 more years? This is an issue. And again, it's not just Cardano. It's Ripple, XRP, it's Internet Computer. There's a lot of protocols that we talk about on this channel that are not interoperating, and I cannot figure out why. Anyway, moving back to this article about lending and what Liquidium Fi is, because that's really what this is about, right? I'm just kind of touching on all of the points that they're discussing. By the way, I'm drinking iced coffee today. How do we utilize this tech? Well, chain key assets fundamentally reshaped how they redesigned the protocol. Traditional lending platforms like Aave require all assets to exist on the same chain, so you can't collateralize Bitcoin on Ethereum's mainnet to borrow Tether. This forces users into wrapping their tokens or completely separate lending markets per chain. Currently, there's over $5 billion of wrapped Bitcoin being lent on Aave, showcasing the demand for Bitcoin in DeFi. Now, I want you guys to understand this because this is a pretty incredible number. Just wrapped Bitcoin, okay? This is cross-chain interoperability. $5.2 billion. When I'm recording this, the market cap of internet computers right here on the top right of the screen, $2.6 billion. So internet computers wants me to believe that there's no benefit to enhancing the interoperability features on internet computer. Meanwhile, just wrapped Bitcoin, which is interoperability, it has more than double the market cap of the entire internet computer ecosystem. Explain that to me. Anyway, moving right along, but more critically, lending protocols depend on rapid liquidation mechanisms to maintain solvency. When a borrower's collateral value drops below the required threshold, automated liquidation engines must immediately sell the collateral to pay lenders. In traditional DeFi, this happens through on-chain liquidation bots that compete to execute these trades, often within the same block, to prevent bad debt accumulation. He said at Liquidium 5, we initially considered using internet computers' chain abstraction capabilities to hold native layer 1 assets directly and execute liquidations on their respective main nets. While technically possible, this approach creates fundamental timing problems. Bitcoin transactions can take 10 to 60 minutes for sufficient confirmations. Ethereum can be unpredictable during network congestion, and other chains have their own characteristics. When liquidations need to execute immediately to maintain the protocol health, these delays become unacceptable risks. Chain key assets solve the architectural challenge. Since chain key Bitcoin, Ethereum, and Tether, and all supported assets, all existing as native tokens on internet computer, we can design unified lending pools where all interactions like borrowing, lending, and liquidations can happen on internet computer's sub-second finality network. The protocol can maintain the health of all positions in real time regardless of which underlying blockchain the asset represents. Our current liquidation bot completes the full cycle from identifying bad debt to swapping back to the original asset in 15 seconds. And so when we're talking about DeFi and lending, right, and leverage, obviously, because if you're getting liquidated, it means you're in some type of leverage. This is, at least for me, it seems like an indicator that it's good, right? I mean, obviously, internet computer being able to process this much faster than the underlying blockchain itself is good. But again, it doesn't take away my other point that we should still have more options for interoperability. But for these DeFi and lending protocols, clearly chain key cryptography is superior than just regular bridging and waiting for confirmations on those other ecosystems, especially when you do need to liquidate instantly on these borrowing and lending platforms. From a user experience, he says, it allows them to interact entirely with their native chains, depositing actual Bitcoin from the Bitcoin wallet, borrowing real Tether to their Ethereum address. But under the hood, the protocol benefits the internet computer's speed and unified execution environment. A Bitcoin collateralized position can be liquidated instantly using chain key Bitcoin, with the proceeds immediately available to repay chain key Tether lenders, all while the user experience remains chain native. And that's great. It is great to have everything chain native, everything being done and processed on the internet computer. But what is the backup? What is the redundancy? What is, like, for me, I think that the network needs a backup. Because if there is an issue on the network, when everybody's using it and AI is integrated, and there's no no way to foresee an issue, right? Well, then everything, you lose faith in everything instantly. This is what happened with FTX's coin, right? This is what happened with Terra Luna. You trust it until you don't. And if there's no redundancies in place and no backup or risk averse things, like if you have an actual bridge on another chain that you're utilizing or that you can utilize, and the risk is spread out into multiple different protocols, multiple different areas of the network, it limits the risk from a downside potential event, from catastrophic to maybe just bad. And that's where we really have to think about, especially with these protocols that are brand new. You know, Internet Computer's only about 5 years since it was launched. And there is a lot of risk. Like, we have to think about this. In Ethereum, there is a lot of risk. But if you take the exploits that are occurring on these bridges and compare it to the actual volume of the network, it's a very small percentage. And so we have to think about this as we scale up. How can Internet Computer spread the risk so it's not all within the Internet Computer's ecosystem? It's one of the things that I just think about, because, you know, it's not just Internet Computer. I think about this with all of the different cryptos and blockchains, right? The risk with Ripple and XRP is that Ripple keeps selling XRP on the open market. So why would I want to hold that asset? People are Cryptoviser. They're going to become the world reserve currency. It's like, it cannot become the world reserve currency when the company just keeps selling all of their coins, right? I mean, effectively, that's what the SEC sued them for, saying that it's securities and they're selling it directly to you and they're marketing it. Now, obviously, they won the lawsuit, and I'm not saying that there's anything wrong with them selling. They're telling you they're selling it, so they're being transparent. If you say, okay, the issuer keeps selling more and more of these coins, and that's going to continue to dilute me as a shareholder or as a coin holder, this is not a coin that I want to hold. They can keep selling. Go for it. As long as they're transparent about it, and they are. But if you think about Ripple's network, it's all based on Ripple. It's a trust system, right? CK Bitcoin, while somewhat trustless, you still have to trust that the system is not going to have any issues. And that's where I just have an issue, right? All the money in one place, that could be bad, right? And so in Ethereum, in Solana, there's a lot of different ways to move money from chain to chain. You have interoperability bridges, you have cross-chain interoperability through Chainlink, you have wrapped Bitcoin, wrapped Ethereum, you could wrap it on multiple different chains. So you're spreading the risk out. If everything was being held on Ethereum, every interoperated wrapped coin was being held on Ethereum, this would be a huge issue, and probably a lot more exploits would be occurring, because there would be even more money and more potential just to take down the whole chain. And once you lose trust in a chain, it's nearly impossible to bring it back. And so that's why I think kind of offsetting some of that risk and saying, let Chainlink deal with that risk. Because some people are probably more comfortable using Chainlink than figuring out how chain key cryptography works and then putting their money in that. Maybe they want to spread the risk out. What if you have a business that you're going to start building on Internet Computer, and you have AI agents that are interacting and sending money to and from each other, but you don't want all of that within one place, right? You want competition. That's the way that I view it. And by the way, this video is really more about the like how this all works, right? Powering cross-chain lending, powering cross-chain interoperability, because Internet Computer is proving that they're able to do that. I don't think anybody who understands what chain fusion cryptography is and what chain key transactions are on the Internet Computer, I don't think anybody who understands that is saying this is bad technology. I just think that it shouldn't be the only technology. And the same thing with Cardano. Like in the previous cycle, when I was like, why is Cardano not getting stable coins? At some point, it turned into, why aren't the ecosystems, Tether and USDC, why do they not want to launch on Cardano? Because it's apparent that it's not a capability issue. It's they don't want to deploy on these chains for whatever reason. And I don't want that to be the case with Internet Computer. And that's why I just don't understand why there's no interoperability outside of chain fusion. But anyway, back to here. And by the way, I really want to know what you guys think about this. Let me know down below in the comments. And while you're down there, make sure you guys are subscribed and give the video a free thumbs up. So now let's get into the lending area. So another big step forward over existing lending platforms is Liquidium Fi's user interface. Current solutions are needlessly complicated and alienate new DeFi users. I would agree. There's no reason why your mom shouldn't be able to lend and borrow Bitcoin. I'm sure there are some reasons, but I get the point. We took inspiration from a familiar DEX swap-like interface, where everything requires as little interaction as possible. Creating an account is simple. You just log in with your favorite wallet on any chain, launching with Ethereum and Bitcoin. And again, this is Liquidium Fi. This is an example. You log in with your Phantom wallet, validate the code to join Liquidium Finance, and then boom, you are in. You can then link and unlink other chain addresses utilizing Liquidium Finance. And you can see this is all being done within the Internet Computer. So you're seeing in real time when you're utilizing Liquidium Wallet that you're interacting with a different chain. I actually don't think that any other blockchain is able to do this the way that Internet Computer is. To lend, you select the asset, enter the amount, and confirm the transaction. From here, it's continuously earning compounding yield. You can see that on the screen. They're going into Bitcoin, adding some supply right there. If you want to borrow native Tether, using your supplied Bitcoin as collateral, you can select any amount that keeps your portfolio health in a positive range. This loan has no fixed terms. That doesn't sound, I mean, there should be definitely fixed terms for loans, but this is DeFi, guys. In DeFi, there's no rules, right? I'm just joking. A lot of times the terms are based on the network, right? So if the network goes down, the terms are you lose all your money, right? If the network goes up and, there's a lot of borrowing, you lending, your APY may go higher, right? Supply demand. From there, you can manage your positions through the portfolio tab, like repaying loans, withdrawing collateral, or adjusting supplied and borrowed amounts. The most critical metric when borrowing is your portfolio health. While most platforms display this as decimal values like this, we use a simple 0 to 100% scale. A health score of 100% means you have no debt, while 0 or below triggers partial liquidation to prevent bad debt from accumulating in the protocol. This intuitive approach makes it immediately clear how close you are to liquidation. Pro users will be able to toggle to the traditional health factor format. And so these are examples right here. Portfolio health, 83%. You can repay some of it. It's a pretty easy interface to use from what I've gathered so far on the Liquidium Fi. I would say way more advanced than other DeFi protocols in other ecosystems. So you can see right there, portfolio health 83.5. The net APY is negative 13%. I'm guessing because you're borrowing more than you're lending here. Yeah. So you're borrowing at 20% and you're lending at 6.9%. Now keep in mind, lending and borrowing can yield very high numbers, but you want to be careful because what did we see in the 2021 to 2022 rotation from bull market to bear market? We saw massive liquidations and a lot of protocols actually just completely disappearing because they completely got liquidated, everything. And from my understanding, like you're able to actually see the Bitcoin on the Bitcoin like in a Bitcoin Explorer. So you're actually able to see your Bitcoin in the Bitcoin blockchain so that you can know that it's not being, rehypothecated similar to what FTX was doing. This created a lot of risk in the market and obviously the following downturn after that. While the core protocol operates entirely on chain, Liquidium Fi doesn't use centralized servers. They run additional infrastructure on top of the user interface to enhance the user experience. For example, it makes email and Telegram notifications possible for position updates. They also provide more detailed portfolio history tracking and advanced analytics for the lending pools. You can see that on the screen right there. So development is still underway, but they aim to launch the first beta version in Q4 of 2025. Before the launch, they're going to be audited by one of the top firms. What firm that is, I don't know. They're going to say more will be announced later. But again, this just kind of shows you that Internet Computer, while they're doing things differently than other ecosystems, they are building the infrastructure, right? From the AI perspective, from the cross-chain interoperability perspective, and they're doing things their own way. And there's definitely positives for doing things their own way, right? Chain fusion cryptography, they don't have to figure out how to interact with the Ethereum smart contracts, how to interact with the Solana smart contracts, the Sui smart contracts, Cardano smart contract, every other ecosystem, right? They're just kind of doing things within their ecosystem and focusing on building vertically up from here. I do think that there is a lot of positives here, okay? But the growth is nowhere near what we're seeing in other chains. And that is a concern, right? And again, I don't think that Internet Computer and DFinity's main objective is to become a financial network, right? They really want to be an AI and high-powered compute network. I mean, even before the AI narrative, they were still like a storage and compute platform. And now they're really kind of taking that on with the AI narrative as well. But for AI to truly be the best and to truly be able to interact, it needs to be able to interact among every chain. There needs to be more options, which I think obviously just comes with as the network develops. But this siloing of the technology is very, very risky because you see the Suis of the world pumping to oblivion right when they launch. And there's nothing that Sui can do that Solana can't do. There's nothing that Sui can do that Avalanche can't do. So why are we seeing Sui, brand new blockchain being pushed by the billionaires, pushing up? Because when it launches, it's launching with all of the technologies that all of the legacy chains like Solana, like Ethereum, like Avalanche, like Cardano, what they're trying to achieve, right? So Solana may be working on 5 projects to enhance the capabilities of Solana. But if you have a new chain popping up, they could launch with all of those things already solved. And so that creates a big competition in that space. But when you're competing with those guys, and then Internet Computer comes in and says, well, we have chain fusion technology, they're so distracted with their own competition and just trying to be better that they're like, oh, what is chain fusion? We don't have time for that. And they just continue to do their own thing in their Ethereum kind of adjacent type of technology. And that seems to be what's working now, generally in crypto, right? Because the ecosystems that are not on board with those kind of technologies, specifically like XRP and Cardano, you could even say plus maybe Tron and Dogecoin, there's no new interest in these cryptos. And their technology is severely limited because of the siloed technological capabilities. Now, obviously, Internet Computer, I don't think they're siloing, but it's borderline silo, right? Because they are adding interoperability and they're adding the capabilities to read and write on other blockchains, which is revolutionary. No other chain can do this. But they're not doing it on top of or in addition to the base layer of what the networks require, which is non-siloed ecosystems. Cross-chain interoperability through Chainlink. One integration of Chainlink on Internet Computer opens up the door for access to over 59 networks, 158 tokens. Right now, look at the number. I mean, if you look at Chain Fusion page on the Internet Computer dashboard, there's 13 interoperated cryptos, and most of them are not even used. The Euro coin, not used. AUT, I don't know, Australian dollar, Australian Tether dollar, not used. Wrap staked ETH, not used. Uniswap, not used. Wrapped Bitcoin, not used. They even have PP coin interoperated on ICP. And they have Octopus coin interoperated on ICP. Like what? And I know people are going to say, but Cryptoviser, they have Chainlink. This is not real Chainlink. This is extending Chainlink. But why do they have Chain Key Chainlink or Chain Fusion Chainlink and not just have cross-chain interoperability protocol implemented? I feel like they can do this, and I feel like they definitely have the money to do this. I don't know why they're not doing it. And it's concerning because I go back to Cardano from the previous cycle, and I was saying USDC is the key, USDC is the key, USDC is the key. And I got people saying, Cryptoviser, we don't want USDC. It's a centralized entity. We don't want that on Cardano. We don't need that on Cardano. We're going to create an even better stable coin. And the stable coin they created is like $5 million in market cap. It's like nothing. And so I don't want that to happen with Internet Computer. That's why I'm kind of bringing it up here, because they're building the technologies right now, right? And it's advancing very rapidly in Internet Computer's ecosystem. But I would like to see even more. And I don't think I'm ever going to not say, I mean, the minute you say, I don't want more, like, no, we should be totally content with what Dfinity is doing. We've already lost, right? We've already lost. Because we have to keep pushing. We have to keep advancing, keep innovating. And while Internet Computer has done a great job of that up to date, right? Especially compared to other blockchains that we've talked about in this video and some that we haven't, we can't stop. We have to keep wanting more. And when Dfinity pushes back and says, we don't really need cross-chain interoperability right now, we need to push back and say, no, we do. There's no reason we don't need it. Because that's what we hear in a lot of ecosystems. I mean, XRP, ask them, why do you have no stable coin? Oh, well, we have real USD. It's Ripple's stable coin. It's like, okay, why is Ripple selling their XRP coins? Oh, because they're advancing the ecosystem. It's like, okay, so them selling their XRP coins to advance the ecosystem through development of Ripple, how is that impacting XRP? Because Ripple doesn't use XRP. And their customers don't use XRP. They use RippleNet, which is different than the XRP ledger. You ask any XRP maximalist, they don't know the answer to that question. They can't answer it. That's a problem. So we need to continue to innovate and see what else is capable. Because to be honest, I don't think that there's any technological feat that we could think of for this ecosystem that Dfinity or the developers within the Internet Computer ecosystem would not be able to achieve. I think they can achieve pretty much anything. I mean, look at all the things they've achieved so far. They've recreated interoperability with effectively no major issues or incidents. But as it scales up, are we going to see that? As it scales up, are we going to see more competition in the interoperability space? More competition creates better products. Better products create safer products, hopefully at least. And so that's really what I'm looking for, because just these products that they're creating, I mean, you guys saw the demos from how to utilize Liquidium Fi. And I think Liquidium Fi just launched in the last year. So they've already advanced very, very extensively, which is amazing. But what's next? How do we get Internet Computer from this abysmal valuation of under $3 billion, right? Again, Wrapped Bitcoin has double the market cap of the entire Internet Computer ecosystem. How do we get Internet Computer's market cap in line with where it should be which is, I believe, over $10 billion easily. But it can only get there with development and advancements of real technologies and capabilities that the rest of crypto and blockchain utilize, tap into, and it's going to be sustained over a long period of time. Now, we're seeing that in the AI space for sure. But we need to make sure that AI has all the capabilities and all the benefits that they're going to need of the Internet Computer's chain. And cross-chain interoperability is key. Use of multiple different protocols is key. Linking in as many ways as possible to other blockchains is key. But can we get there? I think the answer is yes. I think it just matters what the developers want to do, what the holders are going to push for, and what the maximalists are going to demand. We'll have to see what happens, but I have a lot of faith in Internet Computer Protocol. They've done a lot in the last 5 years against all odds. I mean, the price went from $700 down to $2. I think it was the biggest decline in crypto. And they're still chugging along and still advancing real technologies for this blockchain ecosystem. I'll see you guys on the next video. Don't forget to give this video a free thumbs up, subscribe to the channel for more, and I'll see you on the next video. Crypto on.